Hi everyone, welcome to my personal finances podcast, episode 56. Today we're going to talk about simplifying investing for Malaysians with Mr. Llyod from Kenanga Digital Investing KDI. So the world of, whether it's big or small, we are all invested or have invested in something. And the world of investments can be interesting and at the same time overwhelming for some people. So to the podcast who are listening, do you all find investing complicated, overwhelming, scary? So feel free to comment and let us know what you think. And for today's episode, we will have Ian from Kenanga to talk about the market's latest fully automated AI-driven robot advisor designed to simplify how Malaysians save and invest. So let's welcome Ian to the show to find out more. Hi
Hi.
Ian, welcome to the show.
Hi, good morning, good afternoon, and good evening to everyone listening in today.
Welcome to the show and good to have you here on the show. Let's start off with having you introduce yourself, like for the benefit of our audience.
Sure. So my name is Ian Llyod. I'm the Chief Digital Officer over with Kenanga Investment Bank. And that lofty title just means I look after some of our new digital products we're bringing to market, and kind of like new products and services that we want to give people, especially focusing on say new investors or maybe smaller scale investors, and basically just make finance affordable, accessible, and fair for everyone.
That's great. Well, that's just for your very brief and very humble introduction. So just so that for our audience to get to know you a bit better and a bit more personal and in a fun way, I have like quick 5 questions. So yeah, you don't have to like overthink it. It's
Okay,
meant to
hit
be
me.
fun and easy. All right. For the first question, what motivates you in life and work?
Oh boy. Okay, so I have a wonderful and amazing wife and a very, very fun and happy 3-year-old daughter. So they are what keep me up or get me moving every day. Sometimes, when young children, they keep you awake at night as well. But I what I want to do is I want to make, and it sounds really cliche, I want to make finance accessible to people. And when I really think about it, I think like, what would my wife need? What would my daughter need over the next 10, 20, 30 years? And I look to try to bring those products to life.
Wow, that's great. And yep. And I'll probably like check out on your in social media and to check out like your cute, like adorable kid. Yeah. So next question is, what is your personal definition of financial independence?
Great. Okay, so financial independence to me means that it doesn't necessarily mean that you're so well off you never have to work again in your life.
Hmm.
And I know we all want to aspire to that, but really it's being able and open to to take the opportunities in life as they come up, so that you're not held back. And so that means having enough savings or enough investings that if you wanted to go for a career break, you wanted to study, you wanted to take a career transition, it means that you can take that step. You can pursue what the best life that you want, and you're not
Hmm.
held back worrying about the next paycheck and so forth. That's what financial independence means to me.
Yeah, and it kind of like you make it sound like it's more like a sense of a feeling instead of like a magic number. Do you think so?
Yes, yes, exactly. It's that security that you feel secure enough that you can take some of those bold steps that you've always wanted to do in life, but you're held back because you worry about the next paycheck or the money.
Hmm. Doesn't it make you feel like sometimes it's not just about money? Sometimes it's about what we think and what we choose to do in life.
That's very true, and oftentimes about what we think other people think about us. So
Mm,
I say, think about yourself and think what your future self will think about your present self, and then make those choices.
exactly. I'm so gonna take note on that. I'm really like that. Exactly. Think about yourself instead of like what you want people to see, and it's nothing to do with us. Ourselves. All right. Third question. How do you save and invest?
How do I save and invest? Okay, so well, I do use robo advisors where I can. I always have set a bit of money aside, so it's liquid, accessible, and for that whole security thing. And then I put other investments into more long-term things, so a lot into equities or unit trusts, mutual funds. Diversification is the best thing to do, but also I say my big mantra is just start saving, just start investing, Small bits matter over the long period. Just
Hmm.
start. Just start.
Yeah. Let me feel like a deeper dive into the question of when was the first time you started using robo advisory?
Oh boy. Okay, so that was goodness. So actually, I actually, to be really honest, I rolled my own. So I actually have a bit of a technical background as well in combination with finance. So I actually programmed my own really basic robo advisors a couple
Mm.
years back. And I've used them since then basically. So that's why when Kenanga was creating the KDI product, it was
Mm.
just a no-brainer to come and join because it's my passion. It's using technology to make finance accessible.
Wow, that's great. And yeah, I guess like some people would have thought of this, but not many people would have, really started doing it on their own. And how nice is it to have like companies like you guys to have it all set up and all established for us to just use it, right? So, the fourth question is, what's your favorite quote? Like, your life motto or, what you live.
That's a very good one. Okay. So actually, it's an old saying that the best time to plant a tree was 20 years ago. The second best time is now. You're coming back to the whole thing, right? The whole reason about savings and investing in robo advisors is the best time was 20 years ago, but now start now.
Mhm. All right. Does that only apply to investing and saving?
No, I'd say just about anything, right? Because we mentioned earlier that you sometimes you want to take those bold steps in life, but you hold yourself back. And when we hold ourselves back, we are we're not helping our future selves, right? Yeah, so I look at it always that way. I try to always say, what do my future self, what do my future wife, my future daughter, what do they need, and what can I do today to start getting ready for that? So it's a lot of times it's about just take those bold steps when you can. Try to aim to live that best life, the life that you feel that your future self will want, and that your future self will thank you for when you get there. That's the whole idea behind that quote. It's just the best time is just now. Just do it now. Start now.
Wow. Well, I really like it. Yeah, yeah, I think we just have to be aware, I think that word is to be more present with everything that we are doing right now and think
Exactly.
about, what will that bring us, what will that bring to our future self, to our society, to people that we loved. Very interesting. All right. You handled it pretty well. Like no,
I passed. I
no,
passed.
no.
Okay.
All right. So the last one is gonna be the most like random one because it's a randomly generated question. It might or might not make sense and it's just meant to be random just for you to
Okay.
just answer. All
Okay.
right. Let me just load that question. All right. I'm just gonna read it out to you. So who would you rather be trapped in an elevator with? The first option, a video game designer or a pimple popper.
I think I'm going to go for the video game designer. Thank you very much. I think that second one, I'll need to take a hard pass today. Thank you.
So then what would you say to the video game designer, or how would you make use of the time that
Sure. I
you're stuck?
think we would probably have a bit of a nerdy talk around old video games like Super Mario Brothers and Legend of Zelda. Those are some of my favorite games when I was growing up.
Huh, I think I pick a question that it's just too easy for you. I should have chosen another one. All right, but it's an easy pick. All right, interesting. Okay.
My
All right.
turn, Blue.
Yeah,
All
you
right.
are
Okay.
turning blue. Mhm.
Give me
Okay.
1 second.
Yeah, no problem. Whoever just started joining us, welcome to the show. Today it's our 56th episode, and we are very honored to have Mr. Ian from Kenanga KDI with us today to talk about how do we simplify investing. All right, Ian, and you look like you
I'm
are
still
from
blue. Okay, so I've turned into a
yes.
smirk today. I'm so sorry. There,
All right, this
and I'm
is new to me.
not sure I can
Um,
fix this one. I'm sorry. This might actually be on my side. Okay.
All right.
Okay, well, if you're comfortable talking to a Smurf, then I think we can keep going. Sorry about
All
this.
right. All right. Okay. Yeah, it can be kind of distracting, but I think it's fine. Okay, Mr. Surf. So let's start off with the what we exactly going to talk about today, which is simplifying investing. So, and as I mentioned, I mean, maybe it's different for the other countries, but for Malaysia, we started seeing more and more robo advisory platforms are, getting more popular, and getting higher demand as well, getting better traction in Malaysia. So, how do you view the upcoming emergence of more robo advisor platforms in Malaysia?
Sure. So, first thing, I think it's great. I love competition, and I think competition really helps consumers. And it's hard to take me seriously right now, but it's okay. I think competition is a good thing because when you look at all the different robo advisors, and I'll be glad to tell you why mine's the best. But when you look at all the robo advisors, they have different philosophies. And so, as you're exploring them, I'd say think around which philosophies mean the most to you, which ones make the most sense.
Mm-hmm.
So, like, there's one robo advisor. They work on kind of rounding up your change, right? So you spend money today, and then it saves up a little bit every day or every 2 days or so for you. Others are a bit more sophisticated. They have these whole percentages next to the names of everything, and you need to read the details of how it actually works. And they're well established. They follow some mechanisms around it, and that's appealing more to people who really want to have fine grained control, right?
Mm-hmm.
Then you'll find some like my own Kenanga Digital Investing, where we followed an approach where we said, Kenanga's an investment bank. We've had almost 50 years of experience doing equities, doing trading, doing wealth management. Let's take all that knowledge and let's make it incredibly simple so you can just get started. You ask me 5 questions to get started. We only ask 3. What's your age? How long do you want to invest? And what's your horizon? How long? What's your risk appetite? How comfortable are you with making losses or gains, right? And based on those 3 questions, we come up with some portfolios for you, again, based upon everything that Kananga's learned over 50 years of doing this. So that's our philosophies. They have different philosophy, different approaches. I am biased. I will tell you, there's a very, very good one
Thanks
here.
for your honesty.
But yeah, and it's different philosophies, different approaches. And what I love about this is you're going to see them starting to compete more. So you'll start to see new types of portfolios coming up, new ways of investing, and it's great competition for consumers at the end of the day.
Yeah. I think you got a point there, which is each of the company have their own philosophy, and sometimes we will resonate with one of them more, and sometimes our perception might change, and then we might want to expose ourselves to different ones as well. And yeah, okay, all right. So yeah, then in your opinion, how is KDI uniquely differentiating from your competitors?
Sure. So, one thing that we did, I mean, obviously, the whole simplifying it, making those 3 questions, get on board right away. We did our best to reduce the starting point as much as we could. So, right now it's at 250 ringgit just to get started. And then each top up is lower than that, of course. We'd like to reduce that even more, though. But that's one of our areas we competed on. And we also, we take a very, very stringent view that it's a robo advisor. That means it's managed as a robot. So why I say that? Okay, not all robo advisors are the same. Aside from the philosophies, how they do it is a bit different as well. It's a bit like the formula for Coca-Cola, right? It's a very tightly controlled secret that we all have, right? So our competitors won't necessarily tell you, and I won't fill you into all the exact details, but I will give you the shape of it. And then it's all designed by basically the picking of the assets every day is done by the machines. There's no human intervention there. Okay.
Mm-hmm.
What that means is important for us because when we looked at how portfolios were managed in the long run, whenever you have an actively invested portfolio, it inevitably does less than just a basic index in the very long term, very long term. And there's been lots of studies on that. And that's just because of the human emotion right? Human emotion, they have the FOMO, the fear of missing out. So sometimes that fund manager will buy into something when it's a bit too overpriced, right? And then they have the fear of losing out, right? So they are, they suddenly see it dropping in price, so they sell it, and then they ended up selling it at a low point when the next day it comes back up again, right? It's the human emotion inside. We said we're not doing that. We're going to trust our algos. We're going to trust our robo advisor to make the right choices each day. Now, we do have a circuit breaker. I'm not going to lie. If it suddenly went crazy and started buying like thousands of like Tesla stocks or something, then we know there's a problem. We pull the circuit breaker on it, but it's designed on a day-to-day basis. The robo-advisor drives the decisions.
Yeah, I think that's exactly the point for having robot advisory, which is having robots. I mean, sometimes emotions are good emotions that inspire us, motivate us, but sometimes they kind of pull us back when we, really should have been wasting time. Exactly like, your favorite quote where, it's supposed to be 20 years back. And next best time is now, and yeah, and whoever's like is joining us, feel free to comment and share your thoughts, ask questions. And we have Steve earlier, like he was just sharing that that's one of his favorite quotes as well. That's definitely one of my favorite ones as well. Right? Okay. All right. Yeah. I mean, I know I really can't. It's hard to find you serious now. I mean, yeah.
I'm so sorry.
I think, for whoever is just listening to the podcast might be wondering why am I laughing so much? Why are we laughing so much? Is because I'm actually talking to a Smurf. All right. So yeah, while you are facing that, oh,
I
it's
think
good
we should.
now.
I'll try
That's
this one.
good.
Okay, good.
That's good. That's good. All right. Okay. So let's move to how does KDI's AI uses predictive data to manage investments?
Sure. So on a day-to-day basis, we calculate around 1,000 different data points related across all the different asset classes that we can invest in.
Mm-hmm.
So we use that to run some statistical models on performance historically, and then use that to help predict a bit of into the future as well, where things will be heading towards. And we take in a lot of details because our asset base is quite broad. So the KDI Robo Advisor will invest in equities, obviously. So invest in, say, U.S. equities or European equities. Also, of course, closer to home here in Malaysia or Australia and Japan. They can invest in bonds, and so there'll be a lot of government bonds, like the U.S. Treasury bonds, also European bonds, corporate bonds, high yield bonds, and so forth. They can invest in gold, other commodities, and precious metals, as well as real estate through real estate trusts, right? So it has a whole portfolio, and it does a lot of different analytics on each type of asset class to decide what would be the optimal position, the optimal portfolio for today, based upon risk preferences. So if you have a high risk or you're comfortable with risk, you're comfortable with an aggressive stance, it will invest more in like currency futures, for example, or also maybe sometimes into real estate and into very specific countries. If it's less risk, more conservative, it'll go more into bonds as you would expect, but also actually goes into more just general indexes as well. So say, okay, give me an index of all of Europe, or give me an index of all of Asia, as opposed to any particular one country. That way you diversify your risk in that sense. So yeah, for each of those asset classes, we analyze different data points, looking at confidence levels, looking at economic indicators and so on to derive that basic value, and then use that to predict the next couple of days, the next couple of weeks.
All right. Yeah, I like it how you just share like some examples of the different asset classes that the portfolio will be investing in. That gives us a better visualization, having a better understanding of of course everyone wants to know where the money goes to. It doesn't matter. It's like just 250 or 100 ringgit per month. We want to know where our money are invested, which leads to the next point, which how can investors have better transparency on what investments are being made and any portfolio rebalancing or any re-optimization are done?
Sure, sure. That's a really good question, actually. And each robo advisor will do it differently.
Mm-hmm.
For us, if you look and if you open up an account with us, put money in,
Mm-hmm.
wait a few days for it to finally settle and pull up your statements, you'll see each of the different types of assets we bought for you and your percentage holdings in each of those. So you can get a kind of feel for where we're investing. We also give you nice little charts, like a map that'll show you what country or what region you're invested in, which is a really handy way to see that on a quick glance. But I think actually there is space for that. There's space on being a bit more transparent, and I think all the robo advisors could probably do this. Is there's talk a bit more about when is a rebalance going to happen, when is a purchase or a sale about to happen, if it's planned, or at least telling you pretty soon afterwards. I know that there was one robo advisor had a bit of a challenge recently that they bought at a high and then they sold at a low, and there's no prior warning about it. It was definitely done on emotions, and there was a lot of backlash on that. So I think we could, as a whole industry, we could definitely look at being more transparent, offering more insights into that, and maybe even giving more control over it. That's actually something some of our more sophisticated investors have been asking for. You say, I want to be able to control a bit more how you're allocating my assets. And I want to be able to just kind of put my thumb on certain areas and push the robo advisor in a certain direction. It's like, yeah, let's explore doing that. Let's bring it to market. Let's see what we can bring out.
Yeah, I think the question is really not towards just KDI. I think it's generally to all robot advisory out there. I understand that these are the things that we have to act quickly. Sometimes based on the algorithm, but I think everyone would appreciate if it's something as soon as it happened, or sometimes it's just a little bit of explanation. To the investors. What just happened, or yeah, we actually eliminated the part where we don't use any emotions while investing, but the emotions might still come afterwards,
Yeah,
right?
absolutely, yes.
Yeah, but it's good to know that it's something that KDI is working on, and yeah, I think you'll get better. So next important question is yeah, it would be good to hear from you. Would you please share your top 3 tips for investors to invest with KDI?
Okay, sure. So first things first, I said it before, just start. But what you can do, the really great thing, we haven't mentioned it too much, KDI is actually 2 different products inside. It has
Yeah.
KDI Save and KDI Invest. KDI Invest is the robo advisor. That's what we've been talking around on the asset allocation and so forth. But Save is actually a really cool product by itself. At least I think so. So it's a
Mm-hmm.
bit like a high yield account.
Mm-hmm.
You earn your interest on a daily basis. So literally, you put your money in. The next morning, you can open up and see, yep, your balance has gone up. So it's unlike a savings account where it'll accrue it and then you get your interest at the end of the month. You'll actually see it building up every single day. 3% per annum for this year. It's a great starting point to get started, right? So you start with Save, put some money in, start earning some money. When you start feeling more comfortable with it and you're ready, move some of that over into Invest. And then you can select it from any of the different portfolios we have. We'll give you 5 different portfolios to pick from based upon your preferences that you described to us from those 3 questions earlier, ranging from very conservative up to very aggressive. And you can choose between them. You can move between them at any time as well. It's no cost to do so. And that one, KDI Invest, is completely fee-free for the first 3,000 ringgit you put in. And then the prices are very, very cost effective when you go beyond that. So it's actually a great way to gain access to global markets right away. So step 1, start investing. Doesn't matter. I'm gonna be honest, I want you to come over to KDI, but really start investing anywhere. Just start saving. Step 2, put your money in the KDI Save. That way you have a great little starting pot that you can use. You can take the money out at any time, by the way. There's no lock-in like a fixed deposit. You can take the money out right away. The money you see in your account, you can take it out so you don't lose anything when you withdraw. And step 3, when you're ready, come on over to KDI Invest and start exploring what you can do there.
All right, all right. Yeah, I mean that's thanks for the explanation. Yeah, I think it's great that KDI has this um very clear 2 different products, and not too complicated. It's just 2 different ones. So if you're to advise the investors, how do we use these 2 different products? But how should we use them, what are they for, and how, if that's just like, if I just have like a 500 ringgit per month where I can, think about, put it setting aside, how should I use these two products?
Sure. So let's say you had 500 ringgit. I'd say put 250 in save, 250 in invest, and just do dollar cost averaging, especially on the
Mm-hmm,
invest side. Just keep putting the money in every month, just a little bit every month, and you'll just
mm-hmm,
continue to see it grow and grow over time. Now, I mean, it is an investment product, so I have to be very clear. Your capital can go down as well as up.
mm-hmm,
We like the
mm-hmm,
up, but it can go down. Just be aware of that. But use dollar cost averaging. Just like any type of investing anywhere, the longer you're in the market, it'll win out over trying to time the market. So just be in the market, continuously investing over time, and you will. I would expect you to see good results at the end. If you don't, you can come yell at me because that means my robo advisor is not doing his job, right?
All right. You all hear that, all my dear audience, you know who to hunt down, when that happens to your portfolio. Yeah. But I think, yeah, exactly, just to further like strengthen the point about dollar cost averaging, just because we know that the markets goes up and down, and with emotions in the picture, we tend to like, when should I, no, maybe I should wait. And while you are waiting, you are actually losing out the opportunity. So instead of that, if you just be, yeah, I mean, go back to, further understand your own financial situation. Think about, do you have enough emergency funding, and why do you want to invest the money for? If you're very clear with that, just think about, set an amount, and then set it in a, automated, where, every month 500 just goes there, and then eventually you will just thank yourself, and you thank Ian as well for, having this product, and you'll see the amount grow to a certain target, and then, that's how we can achieve our goal. That is basically goal planning as well, right? So yeah, thanks for that. So yeah, whoever is joining us, I see more and more viewers like joining us today. Thank you for that. Thanks for joining our session today, where we're going to talk about simplifying investments. It doesn't have to be scary, it doesn't have to be, yeah, intimidating. So we have Ian here to talk about this with us. So feel free to comment and ask any questions, and it's the best opportunity because you have Ian here to answer all your questions. Right. So next, let's go to so what do you think lies ahead in the future of wealth management?
Okay, this is a great question. I really like this one too. Okay, I know I always have answers to these because I always think about these, like what's going to happen next. And my big personal view is, and it does lead into a bit what we want to do with KDI as well, is that uh, we'll see more and more of I want to call it a value-based investing, right?
Mm,
It's basically investing in those things that really matter to you. So whether that's investing in technology, whether that's investing in healthcare or even space, there are entire asset classes now about investing in outer space and research and development for outer space. SpaceX is just one of them. They're not the only ones. There's a lot more out there.
mm,
Interestingly, here in Malaysia, we've actually been doing this for many years already. When you look at Islamic and Sharia compliant products, because that's actually is value-based investing. So I believe you'll see more and more options around that coming to market, so more diversity and choices to be made in that space. So yeah,
mm,
definitely value-based investing. I also think it'll get smaller and smaller. So I kind of call this a bit of like nasi lemak finance. Basically, you should be able to start investing with the price of a nasi lemak. Now I know nasi lemak has gone up in prices. Not still not 100 ringgit. It's a lot less than that, right? You should be able to invest that. You should be able to get started just putting away the price of your breakfast. That should be enough to get you started. And I think we're going to see trend towards that. That'll get smaller and smaller on the ticket sizes. You can, I think personally, I think it's great for consumers because you can invest in a lot of different things at a very small value to start with, and that gives you that diversity. Coming back to that question of being in the market is better than trying to time the market. At the same time, having a wide exposure is way better than putting all your money in one place. Yeah, so you should buy an ETF or buy an investment fund that covers an entire country, an entire sector like finance or technology. don't put it all on Tesla. Don't put it all on Apple. As much as we like to think they're going places, that's a huge risk to concentrate all your money in one place. So I love it. I think the idea of being able to buy small, bite-sized, breakfast-sized, nasi lemak-sized investments would be great.
I love how you use the analogy, like which makes a lot of sense. Yeah, like I think that's what yeah, earlier I asked, when during my introduction I asked like is investing complicated to you? Is it
Mm,
scary to you? I think most of the time it's just because we're kind of overthinking it, and yeah, and investment doesn't mean like you just throw like 10,000, 20,000, 30,000. Yeah, that is of course like this sort of investment, but I always goes back to our cash flow, because I think
mm,
when we save and invest, the best way is if it comes from our monthly cash flow. If we have like a monthly fixed income, doesn't matter fixed or it's it goes up and down. If you can just be so clear about where you put your expenses, and with that you will know how much surplus you have, then you know how much you can afford to set aside, and then just make it simple, and then we are spoiled with choices now, which makes it good to diversify actually, right?
exactly. Exactly. Yeah.
Yeah. Yeah, that's at least we know that will be the future of like wealth management.
Mhm.
Yeah, but do you think it will get to the point where we are in a different way too overwhelmed by too many choices?
Well, I mean, I'm sure at that point, I'll probably invent another robo advisor that will help you invest in robo advisors. So yeah, we'll get there. This robots helping other robots. Yes. No, I'm joking. It can. It very much can. And actually, that's really is the reason robo advisors were created in the first place, right? Because there's so many options out there. Like even I, I won't necessarily call myself a very sophisticated investor, but even I would be hesitant to buy into, say, currency futures, or into REITs, real estate trusts, if I'm not comfortable with the industry, the geography, the country, everything around what those are. Right? It's a different concept to really dive into and make those right types of choices. Whereas a robo advisor takes a lot of that learning and that knowledge and applies it systematically. So it's always checking and being certain that an asset you're investing in makes sense given the asset itself and your portfolio, right? So that dual approach, we normally have to go to financial advisors for, someone who's their whole life is doing this and thinking about these things. But even then, there's so much, right? I mean, I'm sure you couldn't fill me on every single REIT out there and tell me which one to invest in, right? Because it's just too much. Whereas a robo advisor can actually help us do that to some extent. Coming back to kind of your original question, like what will be the future of wealth management? I think we'll see a combination of these two. I think the robo advisors are really good for people who are just starting out with investing, or need to learn or want to learn about investing. Like I've had some cases where some of my very sophisticated investors came to me and said, you know what, I don't need the robo advisor. I'm fine. But my children or my grandchildren need it because I want them to learn about investing. And so, it's like kind of a generational knowledge and change there. At the same time, I think that's one case of robo advisors, but I think also we're going to see that robo advisors are going to help our financial advisors. At the end of the day, at the end of the day, a robot doesn't quite have that same feeling, that same connection as a financial advisor who kind of gets you, right? Like a human advisor would say, yeah, they'd be able to say, yeah, I know you're planning for a wedding in 2 years' time. Maybe I can help change your assets around. A robo advisor doesn't really get that. A robo advisor is not going to go get married anytime soon, so they don't know what it's like, right? But a human does. I think we're going to see a great combination of this. I think that means that the human advisors can now focus on the things that really, really matter to their customers, right? They can help get them the right portfolios to hit those life goals and those life stages, but they're augmented, they're supported by the robo advisors on achieving it.
Well, I absolutely love your answer about this, your explanation, because yeah, that's exactly what I think as well. I think in the future, and even right now, there's always with this balance. And it's like a 50-50, I don't know, we sometimes like being financial planner, we thank this technology as well, because yeah, I mean, no matter what we talk about, there are still steps way before like people actually go onto the platform and click, invest this like, this amount, but how much to set aside, and how much do I put money, what is this portfolio for? This is something that I'm sure, of course, like the platform might help like in a certain sense, but I think people all want that sort of clarity,
Yes.
which the best way is having someone to discuss this with. Of course we can talk to our friends and and family, should I be doing this? But no, if you have a financial planner where this person actually knows,
Mhm.
top to toe of like everything about your current finances, and actually have been there to explore all these questions with you, it will make it so much easier to decide, which platform to
Exactly.
go for, and then like what kind of risk profile should I be choosing, and yeah, basically the combination of both,
Mhm.
right?
Exactly.
So
Exactly.
yeah, with this, we already know like we kind of, not to say we can tell the future, but we kind of see this happening already. And in your opinion, what is the impact on investors and for the people in the financial services industry?
Sure. So I mean, for consumers, for now, even well, actually for all consumers, competition's
Hmm.
good. We're going to see more and more of that. We'll see more and more interesting options. So I think for consumers, it's great. There's more choices than ever before to start that investing journey. What I also really like is that all the robo advisors, we're trying to make it easy and simple, right? We're trying to help people who've never invested before start to invest. Maybe they've always just put money into the savings account, or maybe the most they've ever done are fixed deposits. Now we're giving them a whole new range of options that they can explore. But on the financial industry side, for our own staff, banks are not going away anytime soon. We're not replacing them with computers yet. Um,
Hmm.
I think there'll still be there's always going to be that space for that human contact, and you need that. And also, by the way, you always need somebody to teach the robot what to do. So the robo
Right.
advisor has to start somewhere, and it starts with a financial manager, a financial advisor who helps create that robot in the first place. So we are going to see jobs in the financial sector change. I think we're going to see a lot more and more about technology becoming key to those roles, having a passing understanding of how technology works, how it's maybe programmed or developed, and the things it can do and cannot do. That's the other side to it. Technology can't do everything. So being able to understand that is really important for finance, but actually for any job in the coming decades.
Yeah, I think so. Like really, like that's what we're trying to do. Like we're trying to eliminate some of the emotions that is, that might be in our way. But like there are people, they are human, they are your team, there are people like Ian, and of course your team who are specialized in this, who actually develop this, and they are always at the back end, taking care of the investments, right? I think that can be like a assurance to the investors out there, because honestly, maybe like it's not the topic to talk about in this session, but there are definitely still some myths
Mm,
about robo advisory, about
yes.
the kind of fear of like oh, is it safe to put our money there, and like who's behind this, can they do anything at any time whenever they want it to be, right? Yeah. Maybe just a quick one, maybe Ian can just talk a bit about the safety and
Sure.
the assurance of putting our money with KDI.
Sure. So actually, I'll look back to actually what's been happening in Eastern Europe over the last couple of weeks.
Hmm.
As we all know, very, very, very horrific what's going on. But when I look at it from a model perspective, we actually saw our model starting to react to that. It could detect that things were happening in the market
Hmm.
and was beginning to take more defensive positions based upon that. So it moved
Hmm.
more from say aggressives to more conservative assets because it was just detecting that something was happening in the world. Now, my robo advisor cannot read the news, so it doesn't know exactly what's going on, but it could sense that the markets were reacting, so it reacted. And so I use that as an example because that's a way of showing that actually these things can actually take action fast. They can move into defensive positions to protect your capital to some extent as best as they can. But when we come back to the whole question of dollar cost averaging again, I mean, really depending upon when you came into KDI when we launched through the last couple of months, because of the way the markets were moving so much, you would definitely see changes in your returns, and it's purely because of the timing for the market, right? Again, be in the market, don't try to time the market. Dollar cost averaging works through those things. So, I mean, all of the usual tools we do to protect our capital in traditional investing applies to robo advisors as well. And that's how you come up with a well diversified and a well maintained and risk tolerant portfolio.
Yeah, you I like it that you brought out the point where it's this time, like while we are talking, like this April 2020, 22, where we are in this time where there are so much noises out there and so much fear out there. What sort of advice do you have, like, for investors who are really just thinking, is it the right time? Like, is it gonna be safe? Like, since maybe they know that robo advisory kind of like react based on the what's happening in the market itself, right?
Yes. So, I mean, like with any investment, it's do definitely do your research. Be comfortable with the risk profile that you're taking. And I always stress, I have to stress this: your capital can go down as well as up, but
Mhm.
just be careful with it, explore it, be comfortable with it, and then make those investments as you go. The We are in rocky times now in the marketplace. I mean, ignoring, setting aside everything else going on, the markets are different. They're reacting differently. They're moving differently than you usually expect. That the thing is, sometimes it's better just to still be in the market, even if it is going up and down like crazy, because
Mhm.
eventually it'll settle. And if you have a well diversified portfolio, right, you didn't bet everything on Tesla, and you diversify your portfolio, then you've got a good base that things will move up again over the long term. And that's historical. That's based upon data that we've seen, the decades of analysis and such on how the markets perform. It's better just to be in the markets in a diversified portfolio over the long haul.
Yeah, I think throughout the conversation we're talking a lot about just dollar cost average it, and then try not to time the market, and then second point is to continue diversifying and don't dump all your money in one basket, and yeah, don't go all out in one that you believe in, even though you really have like more knowledge or more passion about that certain aspects or certain industry. Yeah, and then yeah, pretty much that. And so then that leads to one interesting, probably like it's best to hear from you, which is like what enhancements are planned for KDI, and what's KDI's
Sure. Sure.
direction in wealth management moving forward. I mean, you mentioned earlier that there are a lot of things that you're trying to improve and then learning at the same time, and yeah, it will be great to know like what lies ahead so we can be prepared for.
Sure, that's a really good question. I've alluded to it a bit in around thematic investing, Islamic investing, Sharia compliant investing, and micro-sized deposits and such. So those are a range of options we're exploring. We're actively trying to engage our customers to see what makes sense to them, what do they want to see next, and
Mhm.
create new products that meet them. So
Mhm.
we've been looking at KDI Save has been a really interesting product. We've been exploring, just testing ideas on
Mhm.
what if we had something that was maybe higher returns, but it had a little bit of risk to it as well. So
Mhm.
creating a portfolio of options, and we look at it as this way: one, we're customer driven. So what our customers want, we will look at developing and bringing to market if it makes sense. And two,
Mhm.
stepping stones. So your KDI Save was a great way just to start saving money, and KDI Invest is a great way to invest your money. But we love to help create more stepping stones between them, so you can kind of step up in risk preferences and tolerances, and maybe make a bit more returns as you go upwards into full investing. There's a whole range of things we're looking at, but it's all based on what our customers want to hear.
Mm. Yeah, I think that's the most important point. Like which leads back to what you talk about. What motivates you, for this whole thing. We want to know like what do the people need, and come up with that, and then further like improve it, right? So we have a question from one of our audience, which is what exactly is KDI Safe invested in, and for KDI Invest, how many ETFs are in its universe? Something that you might like to take.
Sure. Okay, Steve, I think you have a good feeling for finances then and the financial markets. Okay, KDI Save is based in Kenanga's own money market funds. So we work with our treasury function to invest in very low risk products, a lot of commercial paper. I think we're exploring bonds and such as well to add into that portfolio to give it a well diversified but risk managed. It's very, very, very low risk managed function there. So that's exactly it. It's basically money market funds, commercial paper, and so forth with low tenors on them. On the invest side, we have, I believe it's between 30 to 40 different ETFs that are evaluated. And depending upon the portfolio or the risk portfolio you have, if you're conservative, you have a certain subset of those. If you're aggressive, you have a different subset of those. So there's about between 30 to 40 different ETFs we look at on a given day.
Hmm. Yep, that's a very clear explanation. Yeah. Yep. For whoever is joining us, who is listening now, feel free to ask questions and comment, or just to say hi, or just to have any comments about what we actually talk about. But Steve, it was a very very good question. Yeah, I did think about that. I think for KDI Safe, I think that's it's interesting to know that it's not just about one fund or one specific like asset that we are investing in. Instead of that, we know that it's probably something that is safer. It works as a stepping stone, but it's good to further diversify from that aspect as well, right? Yep. Thanks, Steve, for the question as well. Right, feel free to ask if you have any other question for us, right?
Actually, I just realized I don't think I ever
Mhm.
defined what an ETF is. So in case
Yes.
anyone who's not familiar with it, it's called an exchange traded fund. It's like a unit trust. So you buy one thing, and in that thing invest in a range of other things. That's basically how it works. But unlike a unit trust, where you have to go to like an agent to help you make the purchase, you can exchange. You buy them on an exchange, and for us, that would mean Bursa here in Malaysia, or if you go to the U.S., you'll have like the New York Stock Exchange and so on. KDI invests in US based ETFs, but those ETFs are invested in things around the world. So, like if you're looking at your statement from us, you'll see the actual ticker symbols. What is SPY, which is the Nasdaq 500. You'll find goodness, it's I completely
S&P
blanked on
500.
what SPY is again. I'm so sorry. I deal with that ETF constantly. I can't remember the name now. But there's a whole range of them. There's like gold we invest in, commodities and stuff. You can look up each of those symbols and actually see exactly what each of them are invested in. And you can see further details on those based upon that. So that's how we do it. We invest in ETFs. So that way with one purchase, we gain a whole exposure to a range of things that we want. And then we balance those. We balance the different exposures to get to the right portfolio that we need.
So does that work the same for both KDI Safe and KDI Invest?
So that's
Yeah.
for KDI Invest only. KDI Save stays here in Malaysia and invests in commercial paper and other money market funds right here in Malaysia.
Yeah, I think that goes back to the transparency of this. Like, do investors know exactly how do they find out exactly let's just say what is KDF Safe investing in right now? What exactly are we holding? Where do we find this sort of information?
So that actually today we don't talk about that much, only because that's with our own treasury and we work with them to manage those. It wouldn't. I don't know if it would actually help customers to see what that is, because it's commercial paper between banks, between companies, and so on. So it's very very short term things. It's not like in KDI Invest where you actually are investing in like a company or something. It's more just the commercial loan papers and so forth between instruments, but sorry, between companies.
Yeah.
So not as exciting. I'm sorry.
Oh, well, it doesn't matter. I guess that goes back to how people make decision while doing this. So exactly, if you know that there's someone, there's someone they can talk to, to ask question, where will my money be, where will we be safe for, that makes us feel like safer. I think that works the same for robo advisory as well. That there won't be one person for us to talk to, but maybe we just, the more we know, which goes back to the point where before we make any investment decision, it's just good to know more. Yeah, I mean, of course we might not get to the point where the expert of each of the investment, but it's just the more that we know, the safer we will feel, right, especially I
So
think yeah, yeah, go
one
ahead.
really great thing, actually, we have a great customer service team. You can go
Mm,
to our website, digitalinvesting.com.my, to get started with investing. But there's a little chat button down there. You can hit that button. You'll be
mm,
connected to one of our team members. They'll be glad to walk you through that. They'll be glad to explain what's inside each portfolio, what are the different symbols and such. I'm sure they're getting quite stressed now, worried they might get a sudden influx of people chatting with them. But they're a great team. Like, they're really knowledgeable and really quick to respond. So they're good. They're a good team. They can help you with that. Like you say, sometimes you need that human touch, and they're just a
mm.
quick chat message or WhatsApp away.
Yeah, exactly. Yeah. Yeah, your customer service team might be, thanks to you, Ian. But it's really just good to know that like we mentioned, yes, it is robot advisory, but we have the name of robot in the term itself, but it does not mean that it's just robots that we are dealing with. They are really real
Exactly.
humans, that you can actually talk to, people with
Exactly.
emotions who can
Exactly.
answer your
Exactly.
questions and who can even deal with your fear of uncertainty, when they start to invest, which is very important, right? All right. So thanks for everything that you share with us. So if there's one thing that you wanna tell our audience to just start doing it right now, without further delay, what would that be?
Things to do. Start saving. Start investing. Plan for the future self. Um, is that it? Is that, yeah? That's what I would say to do.
So just start investing and
Just start.
all right.
Just start.
Yeah. And where do we start?
Take those first steps to that financial independence. Yeah.
Right. Yeah, I think that's important. Which is the earlier questions that we talk about. We all want to, we visualize financial independence, and it might, for some it might be a magic number or just a number that we made up, or sometimes it can be a feeling that sometimes it's just how do we get there is really just by start doing it, and then it doesn't matter how much every month, if you just start now, and then you
Just start.
at least you know that you are going to the right direction, right?
Exactly. Exactly. Just start. But come
All right.
start with me. Come start with me. Come start with me. Come over to KDI.
Yeah.
Come on. We'll help you.
Yeah. I was expecting you to actually do this, just join
Yeah,
us.
of
It's
course.
just it's just
Yeah.
it's just nasi lemak, which is a really great analogy. Sometimes, people just tend to overthink investments. They just think that, oh, I don't think I have enough money to invest. um I don't think, I know how to invest. But sometimes, if you just always thinking about this, instead of just click the button and just putting aside this 250 a month, or just the first month,
Yeah.
yeah, that's exactly how we learn, right? Because we're thankful
Exactly.
that we have
Exactly.
the platforms like this, where we actually have the very clear step to step, where you get to start by just getting the exposure, and then having the easier step to just move forwards, right?
Yes. Yes.
All right.
Exactly. Exactly.
All right. Is there anything, Ian, that you want to add to, tell our audience, or, just anything that you think of that you think like people must know about KDI Save and KDI Invest? Anything
Okay.
that you would like to add?
I'll, I'll give you the quick run through. So just to recap, KDI, two products, KDI Save,
Mm-hmm.
3% per annum, fixed, no strings attached. You'll see your money deposited every day. You can withdraw at any time. So it's like a flexible deposit, not a fixed deposit. And if you're looking at KDI Invest, a great way to get started. Start with 250 ringgit. Invest in global assets, global ETFs around the world. It handles all the complexity for you, and completely free. It's completely fee-free for the first 3,000 ringgit. So say they're great products just to get you started. And when you're really comfortable with those, come on over to Kenanga as the investment bank. We've got a whole range of other products, unit trusts, equities, or partnership with Rakuten Trade, and so on. So we can connect you with other wealth products too. When after you've learned, after you're comfortable with how to save and invest, you can come step up to other products with us as well. We're here for your whole
Thank
journey, from very beginning all the way through.
Well, I think just that can be made into a really good like promo video. I think, but it's really out of sincerity, which I can sense, because like that is exactly true, like just start investing, and then it's a good platform for us. And then and with the first 3,000 ringgit, the entire 3,000 will be invested without any additional charge. I think that
Exactly.
is really
Exactly.
a great way to start, even for us to just to try out, right?
Exactly.
Okay.
Exactly. Okay.
Thank you, Ian. Yeah, me
Great. Thank you
thank
so
for
much.
all
Thanks for having me.
thank you for all the great information that you share with us, and then all the great advice, great tips as well. And thank you for answering the questions in a very professional and yeah, insightful way. All right. Yep. We
Well,
hope
thank you
to
very much.
maybe like in the future have you come to the show again to tell us a bit more.
Sure.
All
Of
right.
course.
All right. Thank you, Ian.
Great.
Thank you everyone for listening and being with us for the entire show. So it was really great learning from Ian. I've learned a lot from him, but you hear us keep repeating the same thing, which is there's never the right time to start. Don't try to time the market. But of course, try to learn a bit more about like where you will be putting your money in, and understand about the platform, understand what ETF is, which we have covered quite a bit, and understand who's behind the team, and just start by whichever amount that you're comfortable with. All right. For all the show notes and and the key points, you can find it on mypf.my/podcat. And for everyone, thank you for listening. I'll see you in the next episode.